Good evening. Ira Epstein with your weekend edition of your financial market wrap-up. And this wrap-up is for Sunday, football day, and it is the 22nd of January, 2022, about 5:05 p.m. Central Time. So on this one, we'll be looking at the weekly charts to try to give you some ideas of longer term. But remember, we enter the Fed blackout period now. Next week on the 1st, we're going to get the FOMC meeting. So about a week ahead of time, they start going in. So look for the Fed members to start peeling off and not having anything to say. This is, though, a big week for earnings. So you're going to see that. We have very few economic data reports out on Monday. So not looking for a lot of impact from anything right then and there. We're slightly lower starting off the day here in the stock indices. Gold is down a little bit from the highs that it recently made. Dollar index, fairly stable. Most currencies just sort of drifting right here. There isn't a real lot going on. And the same is true in all the energies at this point. Maybe everybody's watching football. I don't know. When you look at a monthly chart, we're still getting a rally in a market that has downside bias. In fact, this bias has been in place literally all of 2022 and in 2023. I define that working this way. When a market is under an 18-month moving average, the red line, the bias is down. When it's over it, the bias is up. That's how I look at it on this chart, the weekly charts as well. So when we're looking at the weekly chart, because you're over the number, not under it, the bias is to the upside at this point in time. When we take a look at what's going on a weekly bar, you can almost look at this like I've been teaching you on the dailies and look at your peak here to there, and you made about a 50% retracement in the market, and you're sort of stuck in that range at this point. Are we trending? No. You have a higher high and a lower low pattern. So the market is out of a trend. We had a bounce off the lows, and you're just sort of drifting. I think that's the right word to use right here. As you just saw, you are staying over the 18-week average, which gives me the upside bias, but without a trend, it doesn't do me much good. And the resistance, if you were to get a hard rally, maybe you get back to the 41.64.5 zone, which is the upper Bollinger Band. It ties in with 42.05, which is the 100-week average, but it's going to take a lot to get up there. I'm not saying that's going to happen 1, 2, 3. And momentum has gone flat. It's not overbought, not oversold, really. It's in the 60s, just hanging around. On a weekly chart, there is nothing to do as a chartist. That's how I read it. In the Dow, we had been overbought, and now the momentum is correcting. To correct it, one of two things happen. You either embed or you get a price break on the way down. The market has been fighting, and I think you can see that since November at the 100-week average in green. A little bit over, a little bit under, but you really didn't go anywhere one way or the other. And when we go to the NASDAQ, look at how you've narrowed in these Bollinger Bands. Momentum has been up. But here, too, another one of these markets with a higher high, lower low. So we don't have a clear picture in any of those. The market that's been different, and I've said it in my subscriber videos, is the power has been in the Russell. It's had the higher lows, the higher highs. It has successfully stayed over the 200-week average. It has been over the 18-week, but it is in overbought territory. If it pops higher, look for the resistance, 1949.5, the upper Bollinger Band, and on pullbacks, the combination of 1819 to 1806.5 should be the support. Do I think that you're going to get a lot of movement in front of the Fed? Well, that's going to be questionable. This will react, though, to the earnings, so keep your eye on it, and it has the upside bias. It's the only market that is in a trend and has bias in the same direction of it. In the 30-year bond, I don't know. I'd be very nervous about trying to push this market in front of the FOMC meeting. You made a nice run actually from here in October, and you've recently made the highest high since that period of time, knocking on the door of the upper Bollinger Band. You hit the upper Bollinger Band in the 10-year and the 5-year, by the way, and they both run out of some steam at those numbers. In the dollar index, this rules the day. When you have an embedded reading, which means the slow stochastic numbers, they get under 20 and they just keep going sideways under that. That's a sign that even with the rallies, the pros are selling into it. It's locked in until the red line closes over 21. I do think the pros are using bounces to go short this market. The target zone is still live until you lose the embedded reading. Anywhere now from 98.80, let's call it, to the 97.50 level. And from where you're at right now, that's almost, 300 points away. If the dollar is bearish, then the euro is bullish because 40% of the weighting of the dollar is made up of the euro, and you have the embedded reading here. So on the pullbacks, I think the pros are buying this market, looking to get up to the potential of 111, let's call it 111.02, to the upper Bollinger Band 111.68, right in that general zone. In the Canadian dollar, trend is up, but you are in overbought territory. Any readings over 70 are overbought. So I see the trend up. I would look for support around the 18-day average to come in, but I don't think you're going to get aggressive buying by anybody in front of all that news, in front of how the chart picture is, that is. In the end, you still have an embedded reading. Now, very shortly, the Prime Minister is going to announce his new candidate to be the new bank governor. So look for that. That's going to, and the governor will step in the first week of April and take over the position. So be ready for that. I don't expect Mr. Kuroda, the current governor, to really do anything to upset the apple cart in front of all that. Trend up on pullbacks until the red line closes back under 80. You have an embedded reading, and I think the pros will buy that market until that point in time, until they lose it. In Bitcoin, you've now gotten overbought into the upper Bollinger Band. The trend is up. The bias is up. You've hit targets between right here, and I don't think you'll be staying very long over the Bollinger Band. You only do it 5% of the time. But from here all the way up to 22.80, I look for an awful lot of resistance. In crude oil, you have now rallied into the neutral number. The 18-week average is neutrality. When you hit it, it's like the DMZ zone between North and South Korea. Right in that zone, it's nothing. Well, that's what you've got. You came up to it, you hit it, and you're backing off a little bit. You're also fighting at the combination in the Brent itself of the 100-week average and the 18-week average. You can see these two numbers, 87.89, 87.35, and here you are, 87.39. So you're right there. The trend is up, but you need to get settlements over 87.89 to say the market's ready to go. You don't have it just yet. Same identical thing happening in WTI, but instead of the 18-week average, it's got to close over 83.30, the 100-week average. So you've had a rally off the resistance, and now you're sitting here trying to figure out what next. Gasoline. I think you made your bottom here against the 200-week average in the Bollinger Band, and now you're into the resistance of the 100-week and the 18-week average. Momentum is up. Trend is not up. You still have lower highs. So you've got the trend down, the bias up, and momentum up. A confused chart, to say the least. I put it together, try to come up with some game plans, but that's where we have the fun. This week, Thursday, I'm holding my first live webinar of 2023, and I'd like you to attend. It is free, so don't tell me that, I don't want to pay for something. It's there. You can ask the questions. I've already got plenty of people signed up, by the way. I started mentioning this last week. I would say that we'll probably fill up by Tuesday. So if you're interested, this is the time to get on there and sign up. And by the way, if you didn't get an email from me, it means either they're being blocked by you or you never signed up to give me an email by asking for one of our free offers. But there's a way around that. Just move your cursor to the top of the page right here, and you'll see an icon. Give it a click, sign up. Now, when you sign up, you're going to get from us a receipt with your user ID and your password. When that comes back to you, if you have questions on spiders, stocks, ETFs, please use that to write them. Same on futures. Let me build the charts for you so that when we open the webinar, it's only 20 minutes long, and I do pay attention to the time. It's over. I don't make a recording of it available on the website because I want you in it. Bring your questions. I'll answer as many as I can, of course, right when we're live. But if you're asking me to do full analysis of spider stocks, ETFs, I can't. Why? Futures, I've got all the main futures contracts. There's only 40 of them, roughly. There's thousands of stocks, spiders, and ETFs. I can't possibly have all of them done. I know you're going to want me to put window envelopes in all the studies I use, so give me the opportunity to do that. Again, if you have questions, you can always call my staff. Move your cursor up here. Go for it. I'm Ira Epstein. I will see you all in the morning.